All right, ladies and gentlemen, hello. This is me, Darius Anucauskas from Markets.com, and today is the 14th of May, 2025. Yes, still 2025. I wanted to just quickly do this little video on gold on the technical side of it, because I think that we were at an interesting spot, in my opinion. So I just wanted to pick up on that, just share with you quickly. Maybe you'll find it useful. Before we jump into all that, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. And like I said, we're going through some interesting moments right now. There are some political shifts here and there, but we know that the stock market is also rallying nicely. But yes, I mean, I think that gold somehow kind of pushed away a little bit after it faded away from those all-time highs. But also, before I jump into anything gold related, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So now then. There we go, cleared my voice. So, gold had a fantastic moment back at the end of April where we saw a nice, push to the upside. It was a really rapid acceleration where we managed to hit that psychological 3,500 zone right there. And then we kind of drifted back down very quickly. So what it did was it kind of confirmed that it was ready for a little bit of a retracement. Oh, my camera has stopped working for some reason. Let me just double check very quickly what's happening here, ladies and gentlemen. So it stalled a little bit. There we go, back on track. So like I said, we had this beautiful moment where we rallied, we tested that 3,500, and then we kind of drifted back down. So what I was talking about previously, that whenever we kind of do this move where we go for a new all-time high, but then actually we fall back below the previous all-time high. So this was the 3,430 was the kind of the previous before this big rally, and then we end the end of the trading session, we kind of go back and drop back below the previous all-time high, especially the body of the daily candle remains below that. Oh, now that kind of a bit of a worrying signal from the technical side, and it kind of leads to some corrections. Well, this is what we got. We got that little correction, don't get me wrong. We traveled lower, but then we found support around here somewhere. Now, this is roughly around the 3,210. I would actually say you can put 3,200, and in general, 3,200 was the area which kind of provided that good support. From here, we pushed back up, and now you can see that we're kind of stuck in some sort of a range here. Now, will it be the range? We'll have to wait. At the moment, today, we're seeing a retest of this little territory right here, this 3,200, or at least we're approaching that little area. And everybody's mind is that, are we going to rebound from here? And are we going to do something of a range here? So let me just, for the sake of it, just let me highlight this for our future reference. I just wanted to show you very quickly what I'm talking about here. So yes, I'm loving this idea of a range. However, okay, don't get me wrong. If you're following me, you've seen my webinars, I keep on saying I don't like ranges. And in general, I don't, but I do like the breakouts. So now we're testing the lower side of it, and the question is, can we break this? I'm not going to rush into things because there's more to all this. Because again, there's a lot of valid technical patterns that are forming at the same time, and that's why it's becoming a little bit difficult for everybody to predict. So, of course, as you know, the US dollar has been rallying, and it has been rallying, but only for a little bit. So, in my recent videos, in my live webinars. If you follow those again, or you feel free to join every Monday, Wednesday, and Friday. I talked about this idea here to aim for this downside line taken from the highest point of February of this year. And we kind of came to this, and basically this kind of concluded the larger correction to the upside. Now we're seeing a little bit of retracement, and now we're kind of stuck in between the two trend lines here, the downside and the upside one. So basically we're coiling up a little bit. So we're waiting for this one to exit, and we don't know which direction it will exit. Yesterday we got the US CPIs, which came out on the lower side. It kind of didn't really work in favor of the US dollar, but look, the headline CPI came out by like 0.1% lower, but the core inflation number came out at it came out at the same 2.8%. Let me just confirm the figures. Yep, there we go. That's what I'm talking about. But now, today, okay, we don't have much, but now we're watching Thursday. Thursday, we're getting the US PPI figures, the core and the headline. So we'll keep an eye on those numbers. It's going to be quite interesting to see how the producer price index is performing. So we had the consumer price index, now we're going to have the producer price index. And look, at the moment, the expectation is for a lower number on the headline figure. On the core, we're also expecting a little bit of a lower number. So basically everything lowered by the 0.2%. If that's the case, we could see the dollar kind of drifting, back down again, kind of taking a hit. This means that yes, maybe this could help. Where's that gold of mine? Maybe this could help gold drift, back up here. But look, whenever we have like data like this, we can sometimes have some sort of like false breakouts, especially when we're close to some sort of key areas of support and resistance. Now, what I'm saying is that in a way, we could see maybe, if we suddenly get some sort of a number which maybe close to the forecast. Let's say we get a number, where's that PPI year on year? Let's say if here we get like a number not 2.5 but 2.6. So in a way, we could see a little bit of a positive spike in the US dollar, forcing maybe gold to drift back down. But then everybody kind of comes to this realization that, oh, you know what? Wait. Maybe actually not all is good, because we still came out lower than the previous figure. So, and that's where it kind of stabilizes. US dollar starts moving back down, gold pushes back up, but the breakout here, for example, could already happen. And this is where the 50-day EMA, shown here as the green line, comes in very conveniently, and it could in a way provide a little bit of support here. So what I'm leaning to a little bit. So if, for example, right now, given that we have peaked here back at the end of April, we can draw now a little downside line, because in the beginning of May we struggled to go for a higher high. Instead, we formed a lower high. But at the same time, we can actually also draw this nice little down this line right here. And maybe, just maybe, oh, actually depends on how you draw it. Again, everything is subjective here, so maybe it's this way actually a little bit better. So what I'm leaning is to that maybe we're going to get ourselves a nice little falling channel pattern. If that's the case, this comes in, this little area near the 50-day EMA comes out as a perfect test, as a perfect possible test. So for example, we get a nice drop here, test this area, the market kind of understands that, oh, maybe, the numbers are not that good still for the US dollar, and then, the US dollar kind of starts drifting back down, and gold kind of recovers a little bit. So this is, like I said, this is just an idea. Don't get me wrong. I mean, feel free to comment in the box below, just to let me know what you think. But what I'm considering here is something maybe like this, like a temporary drop first, and then like a rebound from this territory, and then a push back up. Again, this is just one of these scenarios. Now, again, it kind of coincides nicely with this idea of keep staying in the range, although we could break the range to the downside. But if the body of the daily candle remains up at the end of the day, remains above the lower side, then, like I said, then this could be drawn this way. Then, of course, we could start aiming for this downside line, this upper side of the falling channel. Or at the same time, it can actually be also part of a And let me just draw this one very quickly. Maybe it could be part of a triangle pattern, ladies and gentlemen. So something like this, basically. Maybe it's a part of a descending triangle pattern. Who knows? We're here to examine all possible scenarios, but of course, as you all know, according to all the TA rules, descending triangles tend to break to the downside. However, we've seen this happening, I've seen this happening, and you probably yourself seen this happening in the opposite direction many times. So that's why I keep on saying that wait until we get a clearance of one of the sides. Then you can do something about it. While we remain in here, I mean, look, if you're comfortable with that, feel free to do whatever you want. Just promise me that you're going to have a stop loss in place. But if, let's say, this is a triangle, then I'm going to just purely wait until we get a clearance through one of the sides of it. And the upper side kind of is the downside line. So logical, if we clear the downside line, it kind of leads to a change in directional, leads to a directional change of a trend. And then yes, we could maybe start examining the 3,500 level again. Who knows? But again, we're not rushing into things. For now, I just wanted to tell you that, look, long story short, if you're trying to tell me, like, ask me, let's say, which direction I'm kind of leaning to more, I'm actually leaning towards keeping an eye on the numbers and keeping an eye on the reaction, because if we do get that slight strength in the US dollar, maybe we could see a small drop here in gold. We could test this area right here, but then if the market comes back to realization again, the US dollar starts weakening, we could see gold pushing back up, and maybe this could lead to a move a little bit to the upside here, back to that 3,300 350 zone. So yes, something like that, and then we'll go from there. And then it's a new, and then we have to produce a new analysis in a way, because then we'll see if we want to break the downside line, or maybe we don't want to break. Maybe there's something else. Maybe there's some sort of data happening. Maybe the stock market's starting to reverse back down, and this is where more people could start jumping into gold. So a lot of things to take in later, but now this week, in the coming days, tomorrow especially, keep your eyes on this, because like I said, we are at a very interesting spot. And don't forget again about one occurrence that happens a lot of times in the market: false breakouts. This kind of leads to some losses for traders, but try to kind of consider that beforehand. So and that's why I'm telling everybody not to rush, just kind of observe, you have your cold head on your shoulders, and you can go from there. So ladies and gentlemen, let me know in the comments if this was helpful or not. Thank you very much for watching, listening. Don't forget to watch the PPIs, which are coming out tomorrow, the US PPIs, which are coming out tomorrow. And yeah, we'll go from there. So, ladies and gentlemen, I'll see you later. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. Bye-bye.